The next big things involve our five disruptive innovation platforms. So DNA sequencing, robotics with collaborative robots, energy storage, artificial intelligence, and then finally blockchain technologies.
The investment market isn't something that everyone jumps into without thinking. With that stated, most of us find investor success tales to be both motivating and seductive. It pushes us to take risks when the timing is perfect for the right purpose. Welcome back to our channel, Wall Street Winners. In today's video, we'll talk about one such investor who nails her predictions and now owns an investment firm, and her future prediction will leave you speechless. Tesla has a tremendous reputation in today's globe and stands out from other electric car companies. As you may be aware, Tesla's stock performance is rising. Will this performance go on indefinitely? Or are there going to be stocks that become the new Tesla? Here's everything you should know about Cathie Wood's prediction that stocks will become the new Tesla. Tesla was founded in 2003. The foundation is built on a simple principle. Driving EVs does not require any compromises. In fact, it may be faster, better, and more enjoyable than driving gasoline vehicles. Tesla believes that the faster fossil fuels are phased out of autos, the better the world will be in the future. Model S, the world's first luxury all-electric car with cutting-edge battery technology, was debuted by Tesla in 2008. It has consistently outperformed all other cars in the category since its introduction. The company has since released a slew of electric car models throughout the years, each one better and more efficient than the last. Tesla makes electric automobiles more accessible to a wider range of people, which would hasten the arrival of a clean transportation system. It's no wonder that Tesla's stock is surging. People who made early investments in the company are now millionaires. It would be an understatement to say that the performance was outstanding. Elon Musk, the CEO of Tesla, is one of the world's wealthiest people thanks to the performance of Tesla automobiles and his company's substantial shareholding. When it originally came out on the market, many people were skeptical of the performance, but it proved all of the critics wrong. Tesla's ingenuity and creativity are unquestionably a danger to the automobile industry as a whole. Cathie Wood, on the other hand, has made some wild predictions on the subject. Catherine Wood is the founder, CEO, and CIO of ARK Invest, an investment management firm based in the United States. She's a well-known stock picker who owns a billion-dollar company and invests in areas such as self-driving cars and genomics. She is one of Tesla's most ardent supporters. Tesla is in the most exceptional position at ARK Invest, despite the fact that it has sold a big number of shares. Her investment predictions on electric vehicles, particularly Tesla, catapulted her into the spotlight, resulting in a billion-dollar valuation for her company. In fact, she predicted that Tesla would be worth more than $1 trillion in 2019. She also forecasted that by 2023, Tesla's stock would be worth 20 to 30 times more than it is now. When she released it, she received a barrage of condemnation from all sides. Guess what happened a few months later? The stock's value jumped to $400, a tenfold increase over its previous level. This was made feasible by Tesla's and Elon Musk's autonomous driving and battery technologies performing better than expected. Wood acquired a fortune as a result of this prediction success. Cathie Wood says she appreciates being open about her thoughts despite the potential for criticism. She also recently stated that if Tesla is the first to be successful in the autonomous vehicles in the United States, we're beginning to anticipate that not only will Tesla grab the largest share of the electric vehicle market, but it may also take 20 to 25% of the whole auto market in 5 years. Now, let's take a look at some of her most recent predictions. Cathie believes that the genomics industry will be the world's future and that it holds great chances in making a hit in the stock market as well.
So genomics, we think, is the most underestimated and misunderstood of our disruptive innovation platform.
However, before you invest in any of the genomic sector companies, you must first understand what it is, its current market position, and why it is important. If an investor believes in the company's goals, visions, and mission, half of the work is done. This simplifies the decision-making process and risk-taking variables significantly. It provides a moral justification for taking risks, and the genomics industry provides just the right kind of justification. As Cathie Wood correctly stated in one of her interviews, if investors had invested in 3 companies with foundational patents in the late 1990s, that could have boosted the prospect of human existence by curing diseases like cancer or pediatric blindness, the total value of these companies would have been around $300 billion. Even yet, their additional capital is currently less than $5 billion. Cathie is filling this hole with her predictions and prospects. So let's have a look at some genomic companies where you can potentially invest a 20x or a 50x or even a 100x return on your investment. Yes, 100x does sound like a lot of arithmetic to take in. With that said, we have Tesla's excellent example there in front of us. In barely a year, the stock's capital was multiplied 10 times, so the potential is always as high as Everest, and all it takes are a few steps to get there. What exactly is genomics? Have you ever considered why humans are so distinct? There is only one response to this. These modifications occur as a result of a little change in human DNA. The structure, function, evolution, and mapping of genomes are all concerned in genomics, a branch of molecular biology. Diseases like childhood blindness, or for that matter, cancer, occurs as a result of fewer than 1% changes in the coding of these genomes. As a result, modifying and coding processes that can alter the undesired genome can aid in the cure of diseases that affect humans. We could modify the genes and potentially kill the disease via gene editing and neural networks. Any genomic mutation that has the ability to prevent common diseases like diabetes might have a huge impact on the stock market. As a result, investing in companies that specialize in genomics is expected to yield a large profit return. As a result, purchasing a share of these companies and participating in the change for a better future provides both value and reason. The future market cap, as Cathie points out, is the intersection of DNA, artificial intelligence, and gene therapies. Now let's go over a list of companies that could be pioneers in the genomic space and in which you could invest. CRISPR Therapeutics is at the top of the list. CRISPR Therapeutics AG, based in Zug, Switzerland, is a Swiss-American biotechnology company. The company reported revenues of $289.59 million and a net income of $66.86 million in the fiscal year 2019. CRISPR Therapeutics is a leading gene editing company that uses its unique CRISPR-Cas9 gene editing platform to generate transformational gene-based treatments for critical diseases. The stock currently has 4 hold ratings and 12 buy recommendations. Investors should buy CRISPR Therapeutics stock, according to Wall Street experts. CRISPR Therapeutics AG may be fairly valued according to valuation measures. It has a value score of C, implying that it is a worthy investment for value investors. There are some dangers involved though, but they are worth taking. Agilent Technologies is ranked second on the list. For the whole laboratory workflow, this company provides analytical instruments, software, services, and consumables. Food, environmental, and forensics, pharmaceutical, diagnostics, chemical and energy, and research are the 6 markets where Agilent focuses its products and services. Agilent Technologies has a consensus recommendation of buy. Based on 17 buy ratings, 1 hold rating, and no sell ratings, the company's average rating score is 2.94. The stock of Agilent Technologies is increased by 4.4% in the last month. Many investors are turning to it as a result of its strong performance. The return is the profit made in the previous 12 months. One way to think about it is that the company produced $0.2 in profit for every $1 in shareholder capital. So what do you have to lose? You're on the correct track when it comes to investing. Last but not the least, Alnylam Pharmaceuticals Incorporated is ranked 3rd on the list. Alnylam has been at the forefront of transforming RNAi or RNA interface from Nobel Prize-winning discovery to a completely new class of medications. The company was established in 2002 and is based in Cambridge, Massachusetts. Alnylam's ownership and profit have steadily increased over time. Sanofi Genzyme paid $700 million for a 12% share in Alnylam and expanded its rights to many of the company's medications in 2014. The company is at a fairly advanced level, and the graphs clearly illustrate the progress. So, once again, this is an excellent option for all investors. There is no time to waste because it does not wait for anyone. If you invest at the appropriate time and in the correct stock, you will become successful. So, what do you have to lose? Take the plunge and start investing in something profitable and meaningful. With that, we've reached the end of today's video. So what are your thoughts on this? Do you really think that Tesla stock will fall behind other stocks as Cathie Wood predicted? Or are there any chances that she might be wrong on this? Start commenting on your answers below.